Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This simply talks with another video, and this is the Sunday's special video with a small cap for you, and we'll analyze the markets because it has been few days when I put up the last video, and the markets have moved up and down. So we'll discuss about the markets as well as this company. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position of any share that I talk about should their with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a member of the NSE and BSC, and that I'm not a portfolio advisor. Whatever discussions with respect to markets and stocks that I have is purely on the basis of my experience into the market over the last 11, 12 years, and whatever decisions with respect to investments and trading you take, kindly take that on note that it is laden with market risk, and kindly do consult your financial advisor. Now, before I talk about this company and the market, here's a small request to kindly support me on Patreon. Once you do that, will help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership or a $100 membership on a yearly basis through WhatsApp or on Patreon, you get access to my portfolio, my watch list, which I keep updating on a bi-weekly, monthly basis, analysis on different companies, on markets, on global markets, discussion on economies, global as well as local, and whatever decisions you have, whatever discussions you want to have, I'll answer your queries. Plus, long-term pick on a weekly basis, I do bring that up. I've just put that up a few minutes back on Patreon as well as on YouTube and for WhatsApp members. So it's there. Long-term picks are normally 5 to 7 year picks that I believe are companies that are coming at very reasonable valuations and that could do extremely well over the next 5, 7 years. Now, in order to discuss about the market, let me take you to the TradingView website. And so we'll discuss about the mid cap, small cap, as well as the Nifty. So let's begin with the Nifty at the moment. And these are the 5 year chart, weekly 5 year chart. I like this better than looking at on a daily chart time frame, because normally my trades are 2 to 4 months or on a, you can say 4 or 5 year basis. Now if you look at it on an RSI basis, it's reasonably at a reasonable level at 56, but if you look closely, 23,400 is now becoming a very good support. 1400 points lower from here, 5% lower from here, 5 to 6% lower from here is a strong support, because that's a 50-week moving average. And if you look closely, even in June, during the election low, we didn't breach that. And when we went closer here during November, October, November, we fell. And by the end of October, early November, we kept on falling. And eventually we came here to around 23,263, but even here we did not breach this level of 23,250. So we nearly went there, but we did not breach that on a weekly basis, and we'll come back. So 50-week moving average is what you need to look at. Currently we are even above the 20-week exponential moving average, and that's why some of the stocks are doing well in the mid and small cap domain, and things are looking much better than what it was in November. Now, coming back to the valuations part, 1100 rupees is what I feel is going to be the earnings for FY25. Based on that, if you look at it, 24,770, let's round that off, on 1100 rupees, we are trading at 22 and a half times. So we are neither very expensive nor cheap. If you want to have a better valuations, get this Nifty at a better valuation, should be around 21 times. So there is a decent chance that the market could go down 6 7% from here. There's a decent chance that this market could go up 6 7% from here. More chances are that we could see a rally over the next 2 3 weeks and then the fall. But over the next 3 months, at least 3 to 4 months, we are going to be sluggish. We are going to be in a range of 25,500 to 23,500. That's a huge range, but that is what is going to happen. And I have kept on saying that that is what is likely to happen, and I have kept on saying the same thing, that what we have seen over the last 2 weeks, 3 weeks is what I believed is going to happen after the fall that we saw in October, November, and exactly that's how the things are playing out. Uh, Individual stocks are doing well, but Nifty, mid cap, small caps may not, I mean, as an index, may not fire up a lot or go down a lot from these levels. So that's the call on the Nifty. If you look at if we look at the small cap index, that has done better. So actually what we have seen is that the small cap index is very close to new highs. We had 57,600 on a weekly basis. If I turn this on a yearly basis, again we are very close to this 57,730, and eventually actually we breached that. So we made a new high this week, and then we fell from there, which is a very good sign for companies in the broader market. But I believe that we are not going to go much higher from these levels. We could go to 58,000, 58,500, but eventually we will fall from there, and there will be, you can say, high volatility in mid and small caps as well. And again, you need to be cognizant of the fact that the 50-week moving average is around 50,400. There is a chance of a 10% decline even in the small cap index. So be ready even for that from a perspective of 3 to 4 months. So it's kind of a confusing market in you can say in a rut, and we won't say that unless the numbers for the September quarter, or sorry, unless the numbers for the December quarter comes out to be really good, I don't see this market going up a lot. So if you look at the CNX mid cap index as well, same story is being played out here as well. And although we have not made a new high, but we are very close to it. And again, the market is showing the same kind of trajectory as we've seen with the Nifty and the small cap index. So the range will remain the same for all three indices, unless the December quarter numbers in February really is good in the broader markets. I don't see this range being broken. I still see 53,000, 54,000 on the mid cap index coming around February, March, during the time of the advanced tax and everything. So the markets are not doing much, but there are stocks, individual stocks that are performing extremely well. One of those stocks that I bring to you, and you would have seen it here, is Avanti Feeds. I believe that Avanti Feeds is gearing up for a big move, and not just on a 1 year, 1.5 year basis, but from a long term point of view, say 4 5 years basis. An 8,000 crore market cap company, Avanti Feeds looks like is settling into a nice niche, and is about to perform. We had pretty favorable, you can say, announcements during I'm sorry, we had some favorable announcements during the last budget for the fishery industries and pisciculture. So we are expecting the same in February as well. So probably 2025 could be a big year for Avanti Feeds. If you look at it on a PE basis, it's trading at around 20, which is very reasonable, attractive valuations considering how most of the mid and small caps are trading at 40, 50, 60, 100 times. Yes, the growth is not similar to those companies that I'm talking about, but even then the valuations are pretty reasonable. So if you look at the quarterly numbers for the September quarter, they have done well compared to last year. 1,355 crores of sales versus 1,278 crores of sales. What you need to understand is last year they had a dip compared to FY22. So FY22 they did 1322, and it got reduced to 1,278 in terms of sales. So sales figures dipped by around 3% year on year in September 23. Then this year it has increased from 1278 to 1355. That's the good part. Another thing is, from 7% margins have now gone up to 10%, and now we are seeing that the margins are in the vicinity of 10 to 11%. compared to 9, 8, 9, 7% earlier. So we are coming back on the margins front. If you look at it, margins have remained around 12, 13% for a number of years earlier. So if this company from around 10% can go up to 12, 13% over the next 3 years, if Avanti Feeds can do that, and we are seeing a revival post the pandemic for this industry, I think, and global markets pick up because most of their sales come from global markets, and so I believe that the company could end up doing well. Just a bit about the company, although most of you might be knowing because of its nature of being a huge multi-bagger over the last 20 years. So if you look at it from around 14, 15 rupees in 2013, it shot up to around 1,960 rupees by 2017. So in 4 years, became a huge multi-bagger for all investors, and now it has been, I mean, on a huge consolidation for the last 7 8 years. But now we believe that from a long-term point of view, on long-term charts as well as on the numbers front, from a 5 year 6 years perspective, it's making a base and rearing to go on an inflection point. It is so basically the company is into selling shrimp feed and exports processed shrimps as well. uh, if we look at it, then shrimp processing business is around 19% of the total revenue for the company, and new processing plant and cold storage unit is in this place with a capacity of 7,000 metric ton, and manufacturing capabilities is big for the company. In terms of geographical revenue breakup, as I said, presently India accounts for 79% of the revenue, but America accounts for 18% and rest of the world is around 3%. If this picks up, if global economy picks up and their export sales pick up, because that's where most of its margin come through, I think Avanti should do extremely well in terms of margins front and sales front as well. Uh, if you look at the shareholding pattern, and let's come to that in terms of balance sheet as well, the company is nearly debt free, only 16 crores of borrowing versus a high reserves that we are seeing here. uh, and if you look at from the shareholding point of view, 43% is with the promoters. The FII shareholding has remained strong from 13.5%, it's gone up to nearly 14.5% over the last 1 year. So they have not sold at all, and DII holding has declined a bit, yes, from around 8.5 to 5.8 or 6%, but FII holding has remained strong. I believe that over the next few years, this should do well. At a PE of 20, it looks very attractive. Maybe a downside of 10 15% could be here, but over the next 5 years, it should perform well. So this was a video on Avanti Feeds as well as the markets. Please like and subscribe my channel, hit the bell icon and get my video straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.